here I use like pending orders for my news trades, and next candle just does go up and then does its dance and whatever it had to do. So that's how you're taking your second entries. Let's go to the next one. Oh, perfect. So what do we see over here? What do we see over here? Price moving up, potentially price moving up to this area right over here, or even up to this area right over here, right? Now, if price is moving up, price making a high, making a low, making a high, making a higher low, and making another high. If price is making a high and a higher low, what this means is for this candle, the next candle should respect the low of this candle and continue moving up like this, right? Because if it's trending up, this is a 30-minute time frame, by the way, right? This is what it should do. So let's see what happens to the next candle. Oh, the next candle, it probably stops you out. Let me just get my eraser here. Right. So you take a buy. When this candle starts. You put a stop loss below this candle, and this wick down stops you out. So now this candle has closed bearish, right? If this candle has closed bearish, this means now price should continue moving down. Makes sense? So if we draw a zone right over here, now this means price should continue moving down, because maybe price created a high right over here, candle has formed bearish. Now if you put a stop above this candle and take a sell, it should potentially work out. But no, because now you're changing your bias. You have to stick to the same bias. That's the key. That's the key here with taking second entries. When you're taking second entries, you have the same bias. You're not changing bias like a retard. You're being smart about it, and you have the same bias. So let's say you have the same bias. You're like, okay, you know what? This stopped me out, whatever. I'm going to wait. I'm going to wait for the next candle. And if the next candle starts to break the high of this candle, then possibly I can take an impulse entry, having a stop over here or whatever the case is, and then we can start to go up or whatever happens. So you go to the next chart here, and next candle starts to go up, right? Now, on average, I used to miss these moves. On average, I used to miss this move up, because I would say, okay, I'm going to wait for this candle to close. After this candle closes, I'm going to take a buy, and we're going to have a good day. But the problem is now your stop is too big, man. You have a very big stop loss. So you have to really adapt to what's happening in the markets. Now, once this candle starts to break the high of the previous candle, then you start thinking, you start seeing, right? Now, this did not came to me all of a sudden. This came to me by watching it happen over and over again. So you start seeing, you start applying logic that, okay, man, if this candle is breaking the high of the previous candle, what are the chances it's going to continue moving up? If it's breaking the high, provided it has made the low right here, the chances are going to be pretty high, and that's the trade you're taking now. That's the second entry you're taking on the trade logically, that now it's breaking the high, so it makes sense for price to continue moving up. Makes sense? So now you're identifying the stop loss to be maybe below the previous candle low, or you're identifying the stop loss to be below the current candle low right over here. And then price starts to move up and you have a good day. Let's see what happens with the next candle. Oh yeah, it'll start to go up. Perfect. Right? Awesome. So that was the webinar. We went over second entries. We also went over candle highs and candle lows. So what we're going to do now is we're going to take a 5-minute break, and then we're going to do a simulation for around 1 hour. So we're going to be right back.